Okay, it's our monthly catch-up with Shawn Burns, who's the portfolio manager of the Switzer Dividend Growth Fund. How are you, Shawn?
Good, thanks, Peter.
So how's the fund gone?
A fairly solid month last month, up 2%, which is good to see. I mean, Switzer does roll along. Its aim is to get as much dividend as we can, get yield, and keep a quality bias in there, which will give a bit of growth as well, and it continues to do that.
Well, when we started the Switzer Dividend Growth Fund, there weren't a real lot of people wanting to do what I wanted to do and chase dividends, but nowadays the whole world's chasing dividends. Is that making your life a little bit easier?
Oh, I don't know if it ever gets any easier, Peter, but you're right, in now with the Aussie bond down under 1%, I mean, I'm starting to focus what we've been talking about for a while, that low interest rates, you must look the yield, must seriously look at the yield in your, and getting yield into your portfolios, and that's where we're exactly positioned.
Okay, so the strong performance, what was behind it?
It came from a mix of stocks, which is always good, but I think that the election and the proposed tax cuts and lower interest rates is helping a lot of the stocks which are Australian based. So we have a skew, not a huge skew, but we do have a skew towards franked dividends, which is Australian companies, and the Aussie economy sort of, people are starting to get more optimistic as they can see what's happening in the future.
Okay. Let's talk about the yield that you've achieved for the fund. So give us some numbers.
I think we've ended up at 7.9% annual yield. That's 11.2 including franking. So that's very high. I mean, the reason for that...
You've exceeded my expectations, Shawn.
It's always good to do that, Peter,
yeah.
rather than the other way around.
Yeah.
What's happened, it's been an unusual year because of the number of buybacks, and which has pumped up our yield for the year, our fully franked yield, and we've participated in them, and we're passing through all the franking for the year.
What's your expectation going forward? Because you've made the point there are a lot of buybacks and that has helped you. What's your expectation going forward?
What I would hope to do is that we will keep a running yield, a healthy running yield of fully franked dividends for the fund. And then it'll probably go back to more normal. We'll be looking opportunistically to add profits, to realise profits over the year, to see how we go with that, to top up on that yield. That's what we aim to do.
Yeah. Is there anything else that you think people need to know about the fund that is influencing the way you run the fund?
I think that the important thing to realise with the Switzer Fund is that we are after yield, and we're also after quality. So we're staying within those railway tracks of quality and yield. So we're certainly chasing yield stocks, but we run through a quality screen through those, because we don't want yield that suddenly disappears and the rug's pulled from under us. We want companies that are going to repeat that yield going forward.
That's Shawn Burns, the portfolio manager of the Switzer Dividend Growth Fund.